Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
Hello and welcome. Now before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This was all my own original work, as I think you deserve to have that. So with that, LME 3-month nickel. Okay, so just to remind you once more, and it is a timely reminder given what has happened in recent times, as I've said here repeatedly in this commentary for months and months, the most significant feature of this market has been the key lows of 2021 at 15,665, which led to the lows of late November 23, plus the lows in 24, and I suppose also the congestion this year in January, February, late April, May, early June, and a high 14 weeks ago, plus the recent move higher 7, 5, 4, and 2 weeks ago. In recent days, this also added up as a test and halt, more or less, at the gold long moving average, which is currently at 15,450. In addition to this, for many months I've also highlighted how the higher 15,840 level, along with the low for 2021 at 15,665, was and is also still a key level. Please bear these levels in mind. Now closer to the market, the other feature to watch out for is the 50% Fibonacci line for 2025 at 15,325, just above the market. Earlier stabilization over this 50% Fibonacci line had placed the gold long moving average under direct threat. However, we have since pulled back lower, and it's worth now looking lower at the November 2020 low at 14,935. We also have nearby the combination of flatlining green short medium moving average, currently at 15,250, and the flatlining mauve medium moving average, currently at 15,220. These two had previously been some pretty heavy resistances and then as supports, but now back now possibly as resistances. So overall, we have, as I've said 6 weeks ago, as a consequence, and I quote, all this action nevertheless suggested to me a new pattern emerging, a late May to date rectangle pattern. That's currently 14,935 to 15,665. It's that key level again at 15,665. The action since late May fits this sort of pattern. Well, sort of fits this sort of pattern. And I'm inclined to now call it a new pattern and one we are working our way through. End of quote. This continues once again to be the situation right here, right now. LME 3-month zinc. Now, much like LME aluminium, there had been here a number of patterns affecting the market in recent times, all happening at the same time. The first is a thoroughly broken, but even now, still refusing to die, old dark blue May to August 2023 bullish shift pitchfork that subsequently acted as an August 23 to April 24 bull channel, especially the upper and middle tines, currently at 30.64 and 28.99 respectively. This one still will not die. Even when I thought 26 weeks ago that it had finally expired, it still came back like a high-functioning zombie, influencing and impacting the market. Especially back then, the dark blue lower tine below, currently at 27.34, and more recently, the dark blue middle tine, and now the dark blue upper tine. This bullish shift pitchfork has within it two patterns, possibly now dead patterns, but patterns nevertheless. The first is the bright red mid-July to early October bull channel, currently at 28.54 to 3,000 even. In truth, I had optimized this pattern somewhat, I admit that, as I've taken the upper bull channel line from May, whilst the lower bull channel line is from July, and I've ignored the lows seen in mid-June. As I say, it is optimized, but it captured most of the action until recently when we had a break higher that ultimately failed. We're back down now, back within the bright red bull channel. Well, somewhat at least. Seem to be trying to edge out of it at the moment. And that's currently 29.58 to 30.81. Here I have likewise taken some liberties, ignoring the low in early August. I guess what I wanted to do was to show you how we initially started with one bullish pattern and then transitioned into another bullish pattern. Though, as I said 2 weeks ago, I had my doubts about the bright green ascending wedge pattern, especially the upper trend line. They both showed the gradual ascent of prices and how they moved from one pattern into another while still remaining within the core dark blue bullish shift pitchfork. But over the last 2 weeks we have seen breaches both above and below the bright green bull channel. So it's very much suspect now. This now brings me to the overhead resistances, and there are some interesting ones not too far overhead. We have the obvious dark blue upper tine, but above this and close to a lesser Fibonacci line at 3103, we have the very slowly declining purple neckline extension, currently 3111, and that's of the September to December 2022 head and shoulders top. This is an interesting one as it earlier helped erode the bullish incentive back in 2024 in October, November and December. And though we have the double top high back in November and December last year in the 3170 area, it's important to note that such a pattern was created in the first place by this same purple neckline. Hence, please pay special attention to it should we get up there, which seems a reasonable assumption given what the market has created so far. LME 3-month tin. Okay, so the big picture here continues to be focused on the dark blue late November 24 to mid-April 25 bullish shift pitchfork. We are back below the dark blue middle time, currently at 36,230, after spending the first part of October testing over it. Indeed, we are back below the July and April 2024 highs at 35,500 and 36,065 respectively, though we are testing the former today. We're also back below the important bright red neckline extension, currently at 36,605, and that's of the August and November 24 head and shoulders top, which had earlier capped prices along with the dark blue middle time back in July and made the market think twice about rising back at the end of August, though we rose up through these pretty well in early October, and finally being capped by the odd combination of the old broken but still working as resistance now bright green lower time, currently at 38,300, of the November 23 to November 24 bullish shift pitchfork, along with the bright pink upper trend line, currently 38,335, of what may be a large June and July to date based ascending wedge pattern. Now this is not a neat pattern by any means, and I have my doubts about it, but for your guidance, the lower trend line for this pattern is the late June purple uptrend, currently at 33,835. This all ties in with what I said and discussed numerous times before, that much like some of the other metals I've discussed here today, there are a number of patterns affecting the market all at the same time. Now, most of these I have discussed at great length over many weeks and months, and I'd rather not do so again, other than to point out one specific pattern that has been breached, but which might still have repaired itself and be running the market again. It is a bull channel of sorts, formed from the mid-June to date purple lower bull channel line, which has been in step with the rising medium moving average for a while, and that's currently at 34,020. And then on the top side, the upper bull channel line was a combination of dark blue middle tine and or the bright red neckline extension. We are today back within this pattern after spending part of early October above and outside it. As for how long we will remain within this pattern, well, the pressure is still on the upside as we have higher highs and higher lows at the same time in recent days, though it is a somewhat slow grind higher, I have to admit.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.